Hi my dear friends, after a long time I am meeting you. So in this video, my subscribers and then my viewers and customers have been asking, they are in a bit of confusion, right? So because the market has touched 18,200 and then Sensex is 62,000, and people are wondering that Ukraine war, world over recession, what to do with the market? So whether to invest or where should we invest, whether I should invest in mutual funds, whether I should invest in directly, or should I take the conventional plans, should I go to ULIP? There is utter chaos. People have got money. The underlying bottom, what I came to know, that people have got money and people want to invest and then take insurance cover, but they want a proper advice. To start with, I would say that in this video I'm going to concentrate the difference between are kind of what is mutual fund and what is ULIP plans. So these two, no, basically in the academic or any other media, people have been going one way traffic, like go into the mutual funds, don't go into the ULIP. So there are advantages hidden, some advantages in ULIPs also, which are not told to the audience. And same way, there are advantages in mutual fund also. So what kind of investment is suitable for, and how you should view it, how you should do the asset allocation, and why it is each instrument is important in its own merit. That's what we are going to see in this presentation. Today we are going to talk about what is the difference between ULIP versus mutual funds. So straight away we will go to the presentation. Yes, my dear friends, today we will see mutual funds versus ULIP, right? So it's not a kind of a fight. Yes, we will have mutual funds or ULIP, which is best. No, not at all. It is to identify the merits of each product, mutual funds versus ULIP. We will see one by one. Before going to the argument, let us clarify it. There is a academically insurance versus investments. So in academic terms, both should not be mixed. Yes, I agree that in academic terms, insurance and investment should not be mixed. But in real world scenario, lot of other factors, practicality is involved. A customer always thinks, one customer always thinks he will survive the tenure of insurance term. It is quite common. So everybody thinks that I will survive the average life expectancy minimum, right? Maximum life expectancy 70 or 80 or 90 years one would survive. This is optimistic thinking. Otherwise this world will not survive, right? And wants something on return out of insurance policy. So whenever he invests money, so customer always thinks that yes, I should get back some amount of money. Hence, endowment plans are very popular in India because of the mindset as well as the legacy issues. See, India has been a poor country since 1947. People have got a very less disposable income and the culture of savings. India got saved from financial crisis in 2008 and 9 only because we have saved money. Indians are basically savers. At the same time, we are also legacy issues. We were a poor country. Our disposable incomes was very less, and people thought that yes, I would save some money. At the same time, I should also get return, and then my family should also get protected. Though LIC agents used to canvas the policies in such a way that if you are surviving, you will get a returns. May not be very good return, but guaranteed return with bonus. At the same time, if something happens to you, your family will get insurance money, even if you pay one premium. It was a win-win situation for both. Yes, that has been ingrained in our culture. Whenever there is a savings, we want return also. We are not seeing insurance only as an insurance product. We are also seeing as a return product. And then market access or other investments options are not known to everyone. Okay, so a person working in a normal or factory or shop floor or any even professionals are not aware of the investment options, because investments in capital market per se, it requires some kind of understanding of the capital markets. Otherwise, many people will lose out money. Even today, people are losing out money in stocks, futures, and options, and only 5 to 10% of people making money out of it. Rest are all 90% people, they go and lose out money, right? Then hence, the common people, they were in search of a reliable government company, provided both insurance returns equal to bank FDs through LIC policy. That is why the LIC policies have become very popular, and then trusted brand which has been providing consistent returns. And then in case of death, the insurance policies also provides a very good money, that is policy money to the agreed family. So that is why insurance and investment, this dichotomy is not only in academic terms, but in real terms, every person, even me, who thinks, yes, some kind of, whatever the insurance we are taking, some kind of return should also be taken out of it. That is why there are numerous endowment plans available in the market. That is why it is popular also. There is no harm in taking endowment policies. There is no harm in taking ULIP policies. There is no harm in taking term assurance policy. But nobody can be Puritan. So going only for the academic sake, term assurance, and then they are going entirely into the stock market. So because the awareness level and then risk appetite varies from person to person, and then cultural legacy also there. And then we have been brought up like that. So with this premise, we will learn today about ULIPs versus mutual funds. So mutual funds is what? It is mutually collected fund from various people for common aim to invest in capital markets. Capital market doesn't mean that only in stocks, it can be in bond or government securities or hybrid funds or balance funds or purely in equity markets. So it is professionally managed. They are professionally managed. Risk diversification is there. Instead of investing in one stock, a fund manager uses his professional expertise and invest in such stocks and such time, and he knows how to time and then how much to live, how much to invest at what time. So risk is diversified between the various stocks, and affordability and convenience. One need not have any demat account or something, so directly one can invest. So affordability, even a small, even from 100 rupees, one can invest in mutual funds. And then liquidity, so he can withdraw money as and when he wants. Of course, within 1 year there is exit load is there. Otherwise, there is no exit load when you redeem your units. The cost is low. So cost is low means instead of doing research day and night which stocks to invest and then where to invest, opening demat account, paying security transaction tax, other taxes and all, it is bit cumbersome for the normal person. So mutual funds are providing low cost and well regulated by the regulator SEBI and the National Stock Exchange and Bombay Stock Exchange. Both are SROs, self-regulating organization. And then you are also getting tax benefit if you are investing in equity linked savings scheme. So this is mutual fund, my dear friends, and this mutual fund is for the people, those who want to grow the money. They do not have any other motive, but they have got grow their money into equity market or capital market per se. Capital markets, if they want to grow their money, so mutual fund is one of the best route. You will see benefits of ULIP. ULIP offers investment, life cover and tax benefit under a single plan. So here life cover, it provides life cover. Most of the ULIP plans provides 10 times of, it gives option to 10 times or 7 times or 1.25 times of the premium paid, annual premium paid. Suppose somebody pays 1 lakh rupees premium per year. So generally he gets 10 lakhs insurance cover. And then income tax benefits. How? So 1.5 lakhs, if he is taking 10 times means 10 times of premium paid, sum assured is 10 times of insurance means you will be getting under ATC 1.5 lakhs. And then financing long-term goals. So ULIP can be taken for 5 year, 10 year, 10 year, 15 year, 20 years. Generally 5 years is the lock-in period. Thereafter you can do partial withdrawal or entire complete withdrawal also. Then flexibility of portfolio switch. Yes, So there are four funds I told you, equity fund, bond fund, hybrid fund or balanced fund, and then government securities fund. So these fund can be depend upon the market condition. One can switch the fund from equity to bond, bond to hybrid. They can switch these funds, and there are more into it information. Please wait until end of the video. I'll tell about what is the advantage of switching. Then flexibility of portfolios, which I already discussed. Then tax deduction on maturity and insurance payout. So tax deduction on maturity, if you are taking 10 times cover for your analyzed premium, whatever the maturity you will be getting, that is absolutely tax free. There will not be any capital gains unless it increases certain threshold limit, that is 2.5 lakh. That is insurance payout. And then partial withdrawals also allowed. While you keep your fund going, you need not redeem the entire amount in ULIP. You can also draw partial withdrawals. So features of ULIPs and mutual funds. First, let us discuss nature. ULIPs are basically investment cum insurance product. Mutual funds are pure investment product. Withdrawal only after 5 years of lock-in period. Here can be withdrawn anytime. Within bracket ELSS I have put it. ELSS lock-in period is 3 years. Switching, alternating between funds is permitted and not subject to taxation. This is very important point, my dear friends. Let us see. If you are switching here in mutual fund, there is no option for switching. Suppose if you have taken a bond fund or growth fund or balanced fund, if you are redeeming the entire amount, you have to redeem it. Whatever the amount you are redeeming it, that will be treated as redemption, resulting in capital gains. Here, switching happens. Switching happens. Alternating between fund is permitted and not subject to taxation. If you switch the fund from growth fund to balance fund or vice versa or bond fund, there is no taxation. Of course, there might be switching charges in a year, but in a year, 4 switching is free of cost is allowed. Even after that, it is 100 rupees only. So, switching is very good option, my dear friend. Without involving your capital gains issue, you can get it done by switching. Here in mutual funds, redemptions switching is permitted between schemes of the same fund house. However, it is treated as redemption, resulting in capital gains. Right? Charges. Here in ULIPs, as you know, it is a unit linked insurance plan. There is mortality charges, premium allocation charges, fund management charge, and administration charge. Here also, no entry load, but annual fund management charges apply and exit load, if any, if applicable, is there. Okay. So both charges are there. Then we will see unit linked insurance plan, ELSS, equity linked insurance plan. ELSS, I am discussing it separately for certain reason. Here, lock-in period for ULIP, mandatory lock-in period of 5 years. ELSS mandatory lock-in period of 3 years. Returns. Returns can vary because an investor can choose any combination of equity, debt, hybrid in his investment, but an investor can expect somewhere around, if he is in equity, if he has invested in equity, means 12 to 14% in case of if he is choosing equity fund. But in ELSS, equity linked savings scheme, being market linked, the returns depend upon the scheme, but an investor here also can expect 20 to 14%. So there is no big difference between the returns. What are the tax benefit? So the invested amount offers tax deductions under section 80C if sum assured 10 times of annualized premium tax free. Yes, as I said earlier, this is EE concept. Exempt, when you are investing in ULIP, exempt. E, first E is that exempt, 1.5 lakhs exempt from taxation. Under ATC you are getting benefited, and whatever the accrual, so that is not taxed. And when you are redeeming it or when the policy matures under 1010D, the amount is tax free. Okay, so if it is availed up to 2.5 lakhs of annual premium, if there is more than 2.5 lakh annual premium, there will be long-term capital gains. But here in LTCG is applicable under ELSS is taxed 10% over and above 1 lakh. What are the charges applicable? There are complex and multiple charges like policy administration, premium allocation charges and mortality charges. Here, exit load. Now we will see the difference between, or we will see the features of systematic investment plan under mutual fund and unit linked insurance plan. See, my dear friends, as I said earlier, if you are looking only for capital appreciation or growth of money, mutual funds gives the benefit of investment, right? Your goal oriented investment, majorly in equity market. So there are many funds, hybrid or bond fund or government securities fund, but mutual funds are predominantly into growth. That is growth fund people are investing, and switching facilities. So free switching facilities available. But if you are switching between funds in mutual fund, these are taken as capital gains. So if there is a capital gain, that short-term capital gains within a year or long-term capital gains after a year, it will be applicable. And lock-in period is in equity-linked savings scheme is 3 years. Otherwise, all other fund you can switch it anytime, but there will be exit load. And fund management charges. Fund management charges somewhere around 2.5%. It is in mutual fund. So 2.5 to 2.75. This is the fund varying depend upon the expense ratio of the fund or fund manager. Here in we will see the ULIP separately. And death benefits. More importantly, there is no death benefit, my dear friends. So if you are investing in mutual fund, forget about the death benefit. There is no death benefit available. So whatever the fund available, that will go to your legal heir or nominee. And tax benefit available only on ELSS up to 1.5 lakh per year. So whatever investment you are, only first E is available. As I told you earlier, 3 E's are available. E. Here only the first E exempt in equity ELSS savings scheme up to 1.5 lakhs, which is generally covered in other instrument also like PF and other things. So here let's see unit linked insurance plan. Benefits of both insurance and investment. See, everybody has got insurance of different kind. Term assurance, endowment plans, money back plans, whole life plans. So why not have ULIP plans also? ULIP also one kind of bucket of investment it gives. So you should have here your insurance also covered and then investment also taken care of. Both in equity and debts. You can also invest in equity and debts. And limited number of free switches available. That is 4. Generally 4 switches are available. Switch means you can switch from one fund to other fund, vice versa. 4 times in a year. If you want to do more switches, generally people will not do, but there is a nominal charge of 100 rupees or something. And here governing agency is IRDAI, Insurance Regulatory Development Authority of India, and lock-in period is 5 years. See, mandatorily you are forced to save money for some period, at least for 5 years. Generally in mutual fund, the average is around somewhere around 28 months. So within 28 months, some people for want of money they are taking out, or some projects they foresee and then they are withdrawing it, or market is going up phenomenally, it is luring, people are taking out. Here 5 years is a very good medium term, I would say. It is not a long term. So ideal time is more than 10 years your money to grow. To the magic of compounding happens at the 10th year only, because if it is 14% interest means at the age of 4.5 years, at the 4.5 years your money doubles, and then this after 4.5 years, in 8.5 or 9 years, that money doubles again if it is 14 or 15% rate of growth is there. So the magic happens only at the 10th year, my dear friends. In that case you are forced to save at least for 5 years. By the time you would have seen your money growing considerably by compounding. And fund management charges are 1.35%, which is way below than mutual fund. And there are other charges available, as you said, that I will cover it separately when I am taking a particular plan called systematic investment and insurance plan. And death benefits, my dear friends, paid to the beneficiary of the policy. Beneficiary means nominee. So something happens. Suppose if you are taking policy with the single monthly premium of 5,000 rupees, if it is 60,000 per year means 6 lakhs rupees is the sum assured. So even by paying 1 or 2 premium or 3 premium, something happens to the family, that sum assured 6 lakh is paid in addition to whatever the fund is grown, that is the fund value, that will be grown. Even if it is not there, 105% is payable. You will see it in detail. And tax benefit, yes, available on premiums paid towards the policy and maturity proceeds, as I said earlier, under 80C and section 1010D of Income Tax Act. You'll see. See, generally people think whether market will grow or not. See, you have been taking about market, whether it is growing or not. The probability of negative returns. This I have taken from CRISIL. This is a very interesting slide, my dear friends. See, if you are investing for only 1 year, right, there is a probability of 21% probability your investment may give negative returns. If it is 2 years, 18.3%. If it is 3 years, 15.4, and 4 years, so here he has given no 1 2 3 4 5 6. So as the year goes by, your probability of negative returns reduces as time goes up. It means, see, there are 3 years, right? 3. You are nullifying your probability of going negative returns if you stay invested for a long time, right? So if it is 10 years, means no, come what may, right? So there will not be any negative returns after 9th or 10th year. Definitely you ought to become richer by the investment what you have made. So this is very important. Keeping in this mind, you can invest in ULIP. Don't invest only in ULIP. I am saying that one of your investment should also be ULIP among other investments like equity, mutual fund, endowment policies, money back, whole life, annuity, and then ULIP, right? Your investment insurance should also have this ULIP. Which is better? Now I have confused a little bit of you. Whatever you had previous knowledge with these slides, you might have got confused. Let us go to the final slide. Which is better, ULIP or mutual fund? While ULIP is a combination of investment and insurance product, mutual fund is purely an investment product, right? So vice versa, don't think that you will get any money if something happens or any death happens. The family is going to get any money. They are going to get only the amount, that is whatever the NAV reflected they will be getting. ULIP has a lock-in period of 5 years, whereas mutual fund can be withdrawn at any time. So people get lured to, that is, as I said earlier, the average mutual fund SIP is only 28 months. Okay? People will get lured to the money, whatever is available, the growth, they will redeem the money, and then they end up purchasing with a higher price. So please don't do that here, and at least in ULIP, 5 years lock-in period is there. And switching between funds can be done without any without having to pay any taxes in case of ULIPs. So this is the biggest advantage. So in ULIP, so it is going back. Yeah. Switching between funds can be done without having to pay any taxes in case of ULIPs. In case of mutual funds, so you are allowed to switch between schemes of the same fund house. However, switching will be considered as redemption. So you are withdrawing money. As long as it grows, it's not taxable, my dear friends. Once you redeem, money is taxable, right? So whatever the capital gains you are making, if it is more than 1 lakh, at LTCG 10%, STCG 20%. Charges applicable to ULIP are mortality charges, premium allocation charges, fund management charges, administrative. Oh my god, too many charges. Don't worry, my dear friends. In LIC's SIP, these charges, most of these charges are very less, or some of the charges are returned back to customer, and then they are also one more benefit is there. Please don't go away. I am going to tell you a very good plan about LIC's SIP. So please stay with me. When it comes to mutual funds, entry load is applicable. Entry load is not applicable. Okay. So, but annual fund management charges and exit loads may be applicable. So this is between the, so you can reverse, go back and see this, what all the difference between ULIP and mutual fund. Finally, I'm going to tell about one of the flagship product in LIC is SAIP. So Systematic Investment Insurance Plan. Very generic name LIC has given. Systematic Insurance Investment Plan. In one slide, everything is covered. So thanks to the person, it is a bright spark today, is created by some professionals. So I will see the advantages of ULIPs, right? So you'll see from where should we go. Okay. LIC has got a contra investing policy where if the market goes down, then only they will purchase, make huge purchase. When the market is up, they will not purchase. right? Avail, that is the expertise. Avail the LIC's expertise in share markets. No need of knowledge about share market or fundamentals required. So nowadays people know WhatsApp University people are saying that yes, short low, then they are going for investment, future options. People are investing option without knowing even spelling of options. So no need of knowledge. Such knowledge is required. Don't worry about, LIC will take care. Demat account is not required, my dear friends. There is no demat account is required. By choosing 10 times cover, get sufficient insurance cover also. So if you are investing 2.5 lakhs rupees per year, means 25 lakhs is automatically your insurance cover, right? If you invest one premium, pay the one premium of 2.5 lakh, you are taken care of 25 lakhs, right? I know that you will be also having a term assurance, and then you will also be having endowment plans. You should also have whole life plans and annuity plans. Among other things, this is the diversification, asset allocation bolte na. So when you are doing asset allocation, you are diversifying, you are reducing the risk of loss. So at the same time, the trend is always not same. All the product will go down together. It never happens. If the equity market goes down, gold is going up. If commodity will go up, so that is the nature, some kind of balancing. So that is why you should have also have the ULIPs, you should also have endowment plans, you should also have equity, you should also have mutual funds. So that is a bouquet. So if you want a more personalized service, please call us. We are there to serve you. So by choosing 10 times cover, immediately you are getting, so 2.5 lakh per year means 2.25 lakhs insurance also you are getting, your money also will start growing. Again, why LIC is this? LIC is SIP. It is systematic investment plan. Choose the mode that suits you. You can go by monthly, half-yearly, quarterly mode, and then ensures periodical and regular saving for the future. You can just make it a NACH or ECS mandate with your bank, monthly or half-yearly, quarterly, it will get deducted. Then 4 funds are available: bond fund, secured fund, balance fund, and growth fund. Suppose, my dear friends, these are all the fund. What is that basically? If growth fund means, if the market, if you have invested somewhere around 15,000 market, when the market was in 15,000, now the market has gone up 18,000. Now the best time I would say that year high. So I will say that switch from growth fund to bond fund. So your money comes to the bond fund. Again, you are seeing that there is a 5% dip in the market in 6 months' time or something like that. Market is sluggish. When you ask your advisor, he will say that switch the fund to the growth fund now. When the market is going down, you are going to buy more units from the market. Again, the market is going up. Then again, you can switch. So while the stock market is growing, you can also make extra money by smartly switching. So that is called switching. Then charges applicable. Less premium allocation charges. Among the industry, LIC has got a very less uh, allocation charges, mortality charges, fund management charges. My dear friend, there is an interesting feature is available. There is a guaranteed addition. See, guaranteed addition, whatever the annualized premium, suppose 1 lakh is your annualized premium, 6th year LIC will provide another 5,000 rupees, that is 5% as a guaranteed addition. They will credit to units, number of units. 10th year, 10,000 rupees. 15th year, 15%. 20th year, 20%. 25th year, 25%. Not only this, refund of, so what about I am surviving the entire term? So 25 years if I am surviving, I have not availed the insurance. Money may gaya. So it is not like that. The money will not go in vain. Whatever the mortality charges at the time of maturity, that will be, entire mortality charges will be returned to you. That is a very good thing. See, for insurance purpose, LIC is taking some money out of the invested amount, no? So that they are giving it back. My dear friends, many would argue that I left the opportunity cost, and then had I invested it in those money also invested in the stock market, so it would have gone much higher. That is why, my dear friends, these guaranteed additions are there to supplement those losses. So you are already getting it, and then you are also, in an ad hoc manner, you are also getting the mortality charges. For those people, those who are asking, yes, money, I have lost the opportunity cost. What if something happened to that family in between? That person who's ever taken the SAIP, LIC would have provided the insurance, no? there is always a win-win. So everywhere there is a good features is available, right? Then liquidity, full or partial withdrawals after 5 years. 5 years is lock-in, my dear friends. After 5 years, you can do without closing the policy. You can withdraw partial amount, remaining amount allowed to grow with the market. So if you want only 1 lakh rupees, if you are investing every year 1 lakh, so market grows. You want only 2 lakhs rupees for your son's education or 5 lakhs rupees. So you can withdraw those many amount. Remaining amount continue to be in the market. It will enjoy the market participation. Switching to take the best advantage of market fluctuation, which I already explained. So 4 free switches in a year, more switches at a small charge, maybe 100 rupees or so. Then online switching also available. You need not come to office, from your mobile itself you can do online switching, instant advantage. And then monthly mode, SAP, you will be benefiting acquired to units 12 times annually. Thus rupee cost averaging. Rupee cost averaging is nothing but, suppose for if you are investing 10,000 rupees per month, so you are getting 100 units in the initially. If the each unit goes by 2 rupees, it means that the next month you will be earning for 12 rupees the same 10,000 rupees, whatever the units are there, that will be available. Suppose the market is going down 8 rupees or 9 rupees, now you will be getting more number of units. Likewise, the rupee cost averaging will be done if you invest in SAP. That is the beauty of SAP for the long term investor. Here, performance date of launch 2/3/2020 it has got launched. Net asset value 1/10/2021. So it is for the last year they have published. In 1.5 year time, the bond fund NAV is 10.746, CAGR of compounded annual growth rate of 4.66%. Balanced fund, it has given 24.54, and then secured fund 12.82%, then CAGR of 17.02. Growth fund phenomenal 36%. This may not be a one-off event during this COVID time. Market has run up very well. Again, there is a dip. There was a dip in January, February 2022. Now the market has gone again. So the average, on an average, somewhere around in a 10-year average, it is around 13.56 to 15%. That is the average growth rate. It means that every 4.5 years, market grows doubles itself. So that is, if you put the 72 formula in those many years, in how many years your money will grow. So if you put it somewhere around 14, 72 divided by 14, somewhere around in 4.5 years time, your money will grow into double. So that is how it is. And there are options here, my dear friends, parameters of SAIP. So minimum age is 0, maximum 60 years, minimum investment 40,000 per year, halfly, and then maximum investment no limit, term 10 to 25 years, insurance cover 10 times or 7 times you can choose. If you are putting 1 lakh, so insurance can be 10 lakhs or 7 lakhs times of premium, you are free to choose. Risk cover, fund value or sum assured, whichever is higher. So if sum assured is higher, you can get sum assured, or if it is fund value is higher, fund value will be given. Maturity amount, fund value on the date of maturity. So that's it, my dear friends. I would say that now we have got some clarity about what is ULIP, what is mutual fund, what is endowment plan. So I would always say that I would always say that if you are investing, or if you are managing money, or you are taking insurance, you should take a asset allocation of different classes. Like you should have term insurance, you should also have endowment plans, you should also have money back plans, you should have also whole life plans. Each plans have got its own merit. Mutual funds has got its own merit. So if you are having a 10,000 rupees disposable income, that is the money to save, so you have to allocate the asset in different classes, then get maximum benefit out of each class. It is not the dichotomy that yes, this is correct, this is wrong, this is good, this is bad. We have to take advantage of each instrument. That is why government has provided these many plans. Otherwise, there would have been only one plan in all insurance company, only term insurance, no other plans are available, isn't it? They could have made it. So they have made it so many different plans for each different class of people, depending upon their risk appetite, depending upon their requirement, or depending upon their financial goals, these plans are designed. So all these plans are very good plans. So please contact us. We will just design you what is best for you. We will give you the best of the advice. Thank you for watching video, and also visit my website www.startupfin.in, and my number is also written here. Thanks for watching. Please subscribe, comment and like. Thank you so much.